Goodman Real Estate just made a move that proves what many are feeling behind the scenes. Scottsdale, Arizona is not just surviving, it's attracting serious investor money. In early October 2025, Goodman acquired a luxury apartment community in Old Town Scottsdale, 119 units. And that deal speaks volumes about where the multifamily market is headed. By the time you finish this video, you'll see how this acquisition reveals unseen strength in Scottsdale, how luxury multifamily is reshaping Arizona's housing landscape, and what smart buyers and investors can learn before the next wave rolls in. When news broke that Goodman Real Estate, based in Seattle, had purchased this Scottsdale property, many local observers nodded. The barrier to entry in Old Town is high, and a 119-unit luxury complex signals confidence. But let's peer deeper. This isn't just about a single building, it's a statement about demand, capital flows, and the power centers in Arizona's housing market, especially as Phoenix and Scottsdale gain global attention. This property, dubbed Scottsdale on Main, sits right on Main Street in downtown Scottsdale. It's not tucked behind suburbs, it's in the heart of what makes Scottsdale desirable. Walkable access to dining, retail, art, nightlife. That kind of positioning creates value that transcends mere walls and units. Goodman's acquisition is also paired with plans for renovations, a luxurious spa, sauna, upgraded amenities, moves that show they expect demand, not just occupancy. What makes this transaction so meaningful is that it highlights the strength of luxury multifamily in markets many assume are saturated. In fact, this deal reinforces that investors believe there is room above where average multifamily properties cannot reach. With premium amenities, high location value, and operational excellence, these properties command resilience even when lower-tier housing segments struggle. Let's walk you through what this means for Arizona, for Scottsdale, and for anyone watching who wants to understand where wealth and housing are aligning. First, capital flow matters. When institutional buyers like Goodman place millions into one building, it tells you they've run the models, seen upside, and are ready to commit at scale. That kind of signal often precedes broader moves. Other firms will watch, then follow, and property values shift. Second, location premium matters. Downtown Scottsdale isn't random, it's strategic. Residents want walkability, proximity to cultural and entertainment hubs, and convenience. Properties that offer that command rent premiums and lower vacancy risk. That's the kind of mix investors crave in uncertain cycles. Third, luxury tier insulation. While affordable and mid-range housing often gets battered during downturns, luxury multifamily often holds better. Tenants in that bracket are more stable, less rent-sensitive, and more willing to pay for experience, amenities, design, amenities. That gives luxury assets a hedge against volatility. Fourth, repositioning and value add. Goodman isn't buying just for income. They're buying for transformation. The planned addition of spa and sauna, amenity enhancements, operational improvements, these create upside beyond just rent growth. That's how real estate firms scale returns. Fifth, strengthening confidence in Phoenix-Scottsdale region. Arizona's growth narrative is more than sun and mountains. It's employment, migration, lifestyle, and capital-chasing opportunity. When large firms expand here, they validate that narrative in dollars, not just tweets. 119 units is big enough to be meaningful, but not so massive that it loses boutique appeal. It's the sweet spot for investors who want scale without detachment. The luxury orientation ensures tenant quality and higher rent floors. Amenities matter. Outdoor kitchens, lounges, fitness centers, resort-style pools. These aren't just perks. They are differentiators that allow premium pricing. Goodman's planned spa and sauna upgrades signal they believe those amenities will enhance value, not just cost money. Also, management matters. For luxury properties, operations, maintenance, and service quality are as important as walls. Goodman's reputation for hands-on management suggests they believe the operating upside can compound over time. Importantly, the acquisition stresses the barrier to entry. In prime markets like Old Town Scottsdale, land is scarce, zoning is tight, and competition is fierce. Deals there don't come cheap. Goodman's willingness to pay for this speaks to confidence in the future growth trajectory of the area. Let's shift perspective to what this means for those not buying multi-million-dollar properties, but thinking about home ownership, rentals, or smaller investments in Arizona. If an institutional investor is buying in Scottsdale's luxury segment, that filters value perception downward. Neighborhoods near the acquisition path may see ripple effects: tighter rents, rising demand, and pressure on supply. If you own or plan to own property nearby, this may shift your expected returns. For renters, this raises expectations. Luxury perks, lifestyle amenities become must-haves. Buildings will compete on experience, not just location. That prompts landlords across tiers to upgrade or lose tenants. As tenants, that means more choice or necessity to pay for better. For small investors, this acquisition is a glimmer of where capital is going. If firms like Goodman see Scottsdale as a playground for luxury returns, it signals where niches will expand next, perhaps in micro markets that mimic design, amenities, and service in lower-cost zones. For the broader Arizona real estate narrative, this deal strengthens confidence in the Metro Phoenix region. It suggests that growth, population, and capital are aligning there, not just in coastal markets. That narrative draws attention, demand, and future deals. Here's where it all comes together. This single acquisition isn't just a transaction, it's a marker. It says the luxury multifamily market in Scottsdale is not just holding, it's expanding. It says that capital sees Scottsdale as safe ground, not experimental ground. It suggests the path for Arizona in the next decade will include more vertical, amenity-rich housing, not just sprawling single-family homes. It also means competition will increase, property values will appreciate, rents may rise. The edge you might gain today by buying slightly ahead of these waves could compound heavily in years to come. It highlights a shift. Smaller investors or homebuyers must think like institutions. Focus on amenities, location, operations, transformation, not just square footage or lot size. The future winners in Arizona housing won't be those who simply ride cycles. They'll be those who understand where cycles are heading. As we wind down, here's the core principle. Trends move slowly, then all at once. Arizona has been rising for years, but now those undercurrents are becoming visible in big buys like this one. Don't rush into the market blindly. Study these moves. Ask, where is institutional capital going? Which neighborhoods are being uplifted? What amenities are becoming baseline expectations? How can you enter now, before the wave fully arrives, so you ride upward, not get drowned? Think in decades, not months. Goodman's Buy in Scottsdale says long-term confidence in Arizona. You want to align with that? Not chase short-term hype. If your goal is financial growth via real estate, watch these luxury deals. They often come early, before the general market sees them. They tell you what direction supply, demand, and valuation will take. Scottsdale on Main is more than a property. It's a signal for the entire region. It's a blueprint of how real estate in Arizona evolves. Higher scale, better amenities, tighter design, premium experience. If you act wisely, informed, patient, strategic, you can position yourself not behind the wave, but riding its leading edge. So, consider this acquisition a call to clarity. Study deals like this, ask hard questions about location and operations, and when the next opportunity emerges, be ready. Because in real estate, timing and insight often matter more than capital alone.